Everyone, hope you're doing well. As I'd mentioned in my previous video, I wanted to put my dividend portfolio on my channel and also wanted to track it. Now, do I think it's the most optimal allocation of capital? I don't think so. But then I'm not a financial advisor and I don't know much. I'm just in the journey of trial and error and I'm learning as I go. I do a lot of trial and error with a lot of things in my life. For example, trying to lose weight or pick up a new skill. And investing is no different. I think I want to document out here what I'm learning as far as my personality is concerned through my investment journey. And the purpose of these videos or this series is really to sort of look back, hopefully from 10 years from now, if I'm still alive, and see how far I got or how far I didn't get. Anything can happen. As I said, like, you cannot predict the future. You can only plan for it, choose a path, stay on it, be flexible. That's all I'm trying to do out here. Now, as far as my dividend portfolio is concerned, I think the reason why I have it is because I think it gives me a pretty steady state of, passive income. Now, before, I get too excited or anybody listening to it gets too excited, it's not very big money that I'm talking about right now. My dividend portfolio is about $1,900 every year. So if I were to extrapolate my quarterly dividends on an annual basis, that's how much money I should get if all my stocks continue to give the dividend that they're giving today. There's no guarantees. And I know that. I've thought of other vehicles of investing, most prominently real estate. But I honestly think that I don't have the bandwidth, the temperament, or the family situation right now to deal with any real estate related issues. For example, um, tenants or property management. So I've tried to stick to dividend investments. Now, as far as my dividend investments are concerned, I know that they're hassle free. I've invested my money in these companies. I do feel that there's some poor soul out there working away at nights, trying to make me money, albeit a few dollars. So every time even a dollar hits my account, I feel very happy. I feel like somebody else has done the work for me and I'm just here collecting it. And that's, if I can, 10 times it, I'd be very, very happy. So the idea is, over the last couple of years or 2.5 years, really less than 2.5 years that I've started investing, I've gotten to a $2,000 dividend portfolio. And I want to see what's possible in 10 years. Is there a significant portion of my earning that I can replace with the dividend earnings? I do not know. Some of it is definitely pipe dream. I don't think, dividends, you get enough. Like, I don't think I get enough dividends that I can replace my income with it. But that's not going to stop me from trying. As far as real estate is concerned, I'll definitely give it a try once the situation at my end becomes a little bit more palatable for it. Right now, I don't know. So, you know what? The idea is to document the journey as I go along, maybe some errors, that I make along the way, and then sort of, staying the path, but being flexible. That's more important. I started as a dividend investor in the, in the stock market. My first stock was Kraft Heinz. I basically Googled, top dividend stocks, and Kraft Heinz was, I think, one of them. Warren Buffett had invested in the stock, and I thought that was a good bet given its dividend yield. I also found out that Kraft Heinz had some accounting related troubles. In hindsight, I don't think anyone should invest in a company that is, has anything remotely to do with any kind of fraud, whatever it may be. It does not matter. I got out of that stock pretty quickly because it was in itself a pretty volatile stock. But you know what? I have grown my dividend portfolio quite a bit. I love all my dividend making stocks, no matter how small the dividends are. For example, Nvidia pays 4 cents a share per quarter. 8 cents, 16 cents, I believe, for the whole year. I have 8 stocks, so it doesn't give me a lot of dividends, but I still love it nonetheless, because that's still, that per 4 cents per share per quarter is still somebody else working for me, and not me working for myself. So I think that's why I like it. Now, as far as approach is concerned, and I'll share with you my dividend portfolio, but my approach is pretty simple: pick solid companies and let the dividend fall in place. Now, in the beginning, as I mentioned, I chased the yield. It's very, it's not an advisable strategy, of course, because what's dividend yield? Dividend yield is dividends that a company pays divided by the stock price. If the company does not do well, the market will punish the company and the stock price will fall. As the stock price falls, the denominator becomes smaller, right? Dividends divided by the stock price. And as the price is falling, the denominator becomes smaller. As the denominator becomes smaller, the fraction in itself becomes bigger. So the dividend yield goes up. But that dividend yield is not sustainable. So obviously, made the mistakes, in terms of chasing some dividend yields, and only to realize that, the stock price was, it was a very artificial way of sort of pumping the dividend yield. So anyways, the other thing that I learned, I knew it, but I never sort of, saw it in practice, was that, it can be taken away. Boeing and Disney are 2 examples where I bought the shares thinking that these are good shares, but they also come with a dividend. And then pretty quickly, these 2 companies were very quick in sort of announcing, as COVID happened, there was a lot of issues with Boeing as far as Max was concerned. I think they still have issues. And I did not get the dividend that I had invested in the company because it took them away. So it can happen that you could lose out, if the company decides to say, no more dividend. That can happen pretty simply. Now, one thing I'll tell you is there is a reason why I track these dividends, because I want to know what each company is paying. Are they increasing their dividends, or what's the news out there as far as dividends are concerned? My portfolio also has growth stocks that don't pay me any dividends. I have Tesla, I have Lucid, I have Adobe, I have Google, I have Facebook, I have Shopify. All these names are getting hammered, by the way, because of the yield, or sorry, the announcements, or the treasury announcements that we see every day, or some hawkish meeting where the interest rates are expected to rise. So all these stocks that I just mentioned have been hammered one way or the other, and I'm losing, quote unquote, a lot of money. And I say losing a lot of money, that's unrealized losses, obviously, because unless and until I sell them, they're not realized. So whatever. The next thing is, okay, you know what? Let's just see where my dividend portfolio is, and few things that I think are pretty peculiar about it. So let's just go there. Just one second. So this is my dividend portfolio. Hopefully you're able to see it well. Again, I've listed all the dividend making companies from my portfolio out here. It does not matter how small a position I hold in a company. For example, General Motors, I have 0.049973 stocks. You know what? It does not matter. At the end of the day, General Motors gives me 7 cents in dividends that I'm still as proud of as any other dollar or cents that I get from any other company. One thing that you'll notice, and I'd mentioned this in my previous video as well, is that none of my dividend making stocks, as a matter of fact, none of my stocks is a whole number. None of them. Every one of them is a fractional shares. I get, let's say, for example, I got a $25 dividend. What did I do? I bought like probably 6-7 different companies, fractional shares. I bought Microsoft. Today I bought, as I'm recording this, today is 10th of January, 2022. I went in and bought, despite the turbulences in the market and whatever it may be, I went in and bought, a little bit of AbbVie, I believe a little bit of Pepsi, a little bit of Goldman Sachs. I also bought Lululemon, although it's not a dividend-making stock. I bought Facebook, obviously not a dividend stock. But you know what? I thought even with my $2, $3, $4, I can go and buy the stock. So the first thing that you'll notice is, and I'm going to talk about these fractional shares later on in one of my videos, because it's important. I think it's a matter of psychology more than anything else. But you can see that, you know, all my stocks are fractional shares. So yes, you know, I have obviously 100 shares of Microsoft, for example, as you can see. I've also went in and bought 15.15 shares as well on top of it. That's because I had this extra money lying around, or if I put in $25 in my brokerage account, I, you know, allocated it to many different companies. I even buy, companies like Amazon, like $2 in Amazon or $1 in Amazon for that matter, right? The stock is $3,000 worth, but it doesn't matter. So that's the first thing. Second thing you'll notice is the total yield that I am getting, if I were to extrapolate these dividends for the full year, is 1.58. So it kind of makes me feel happy in a way. 1.58 is not a crazy dividend yield. It's actually pretty small. But at the end of the day, you know what, at least it makes me, it gives me some kind of like, you know, if somebody is looking at it without context, you know, they can say that this person was not chasing the yields. I did start chasing the yields, companies like AbbVie. So I've highlighted them out here. AbbVie, $4, 4.19% is a dividend yield. Obviously, as the stock price changes, these keep changing, but roughly they've stayed the same. Realty Income, again, I went after the yield. This stock pays me dividend every single month. I think right now I'm getting about $25 a month. Pepsi, I think also I went in as a dividend yield perspective, rather than sort of, you know, okay, look, this is a great company and therefore I should invest in it. Oh, by the way, it pays me a dividend, and you know what, I'm happy because I'm getting a dividend. That was not the approach. The approach was, let's look at the dividend yield and then let the, you know, everything else fall in place. But I quickly learned that, you know, you can't go you can't go yield chasing. I don't think, I mean, I've never looked at it, to be honest with you, but I've heard AT&T has like a crazy yield, like 6% or something. But what has the stock price done? Nothing. So, you know, at the end of the day, I don't care. I want to get solid companies that are still, you know, in some kind of growth mode, are still sort of investing back in their business, and working, and are good brands, as opposed to chasing yields. So that's what I'm trying to avoid now. I'm very proud of my Microsoft investment. I really hope the stock doesn't get hammered by the current situation. But you know what? Microsoft pays 62 cents a quarter. You hold 100 shares. That's every quarter I'm going to get $62 in my brokerage account. Guess what happens to that? That goes back into buying, you know, some of these great companies, even growth names, to be honest with you. But you know what? It's from the dividend money. So I am going to put this right back into my portfolio. Maybe sometime later, I remember, you know, I read the book, Little Book of Common Sense Investing. Great book if you can get a hold of it. It's not very difficult read. It's very, very easy, and you should definitely read it. And it kind of talks about, if you reinvest the dividends into, back into the stocks, that just multiplies your returns. However, you have to understand, if let's say, for example, if Pepsi pays me $5, I may not want to put the money back in Pepsi. So I look at other companies and so on and so forth. And therefore I'm going to go, I don't put it back. I don't do DRIP, which is the reinvestment of dividend. I get the dividend and I invest it in different companies of my liking when I get it. So that's where I am. One thing I wanted to really point out here. So I've talked about, the fact that don't chase the dividend yields, go after great companies. The third thing I want to talk about, which is related to going after great companies, not caring about the dividend yields per se. is look at the growth of these stocks, which not many would consider, the high flying tech stocks. Obviously, they're not, except maybe Nvidia. Look at the growth of these stocks in my portfolio. If I just had these stocks, if I didn't even have Tesla or Lucid, Adobe, Google, Shopify, or Facebook, these stocks on their own have grown 30%. Again, prices as of yesterday, and the stock market was up today. At the end of the day, so probably even a little bit more. What does this tell me? As an investor, as somebody who's looking to continue the investment journey going forward, what it tells me is that if you invest in good companies, the stock price appreciation is going to come. It's not going to be crazy like a Tesla where it went up by 20% or 10% or whatever it may be in a single day. But over a period of time, you won't even notice, and this portfolio is going to grow. That's the beauty of investing in companies that are really, really, really stable. If you look at some of these companies, Bank of America has grown 64%. As good a growth as anyone else. Obviously, it has benefited recently from the rate increase stuff, but still, these cycles are going to come and go. Costco has gone up 53%. I invested in these not too long ago. Home Depot has increased 83%. This is, in my mind, that's just amazing and sort of crazy, to a certain degree. AbbVie has grown 39%, right? So it is amazing as to how stocks are growing. Goldman Sachs has gone up 79%. Target, again, I think I mentioned it, 79%. So you don't have to chase speculative growth companies, the companies that you don't know anything about. I have been burnt by putting my money into companies that I thought were just amazing. They've come onto the market. Let's go put my money in there just because everybody's talking about it. Jim Cramer is talking about it. It doesn't matter. At the end of the day, I feel this is my insight. Buy good companies. If they make dividends, great. And the growth of the stock will take care of itself. You're going to get some dividend on the side, right? And reinvest those dividends back into your portfolio, and do not chase dividend yields. I think it's a good indicator to look at what the dividend yield is, because I would have never found AbbVie as an investment stock if I had not looked at the 4.19 or whatever it was at the time. And it has grown for me. I think I was a bit lucky, to be honest with you. So again, I'm very happy that, for example, Nvidia, $1.29 is what I get from Nvidia every year. Am I happy about this? Yes, because it's free, technically free in the sense that I'm not working for it. Somebody else is working for it. So you know what? If you give me $1 every day, if I haven't worked for it, I'll be happy. It's, to me, it is not my effort that has gone into it. My effort did go in making $1,500 and investing in Nvidia, but that's fine. At the end of the day, I am getting this money for investing or putting my vote into a company that I think is a good company to begin with. Realty Income, the same thing, $297 every year. AbbVie, $361. Now that leads to $1,920.64. Let me divide that by, and that gives me the monthly dividends of $160. My first goal is to keep investing to a point where I get to $500. And again, the criteria is to invest in good companies, not some crazy yield chasing companies, but good companies, slow and steady. I know I'll get there. If I can get to $500 a month, $6,000 a year, I'll be so happy. I'll be so happy. I think I'm gonna party. Again, I mentioned I'm a frugal guy, but I'm gonna party. I think I'm gonna treat myself, but not before I get to that $500 per month. Once I have that, think about it this way. I have set a goal of, I think, $2,000 every month to be invested in stock market in one form or the other. So either my 401ks or, the investment that I make in the market. Now that $2,000 is going to be 1,500 because I'm going to be making $500 from here. So that's the goal that I have. Now, I don't want to bore you with details, but one last thing I would tell you is, you should, if you're looking to invest in dividends, you should make at least some diligent effort, or, do your due diligence in terms of understanding, can the company even sustain the dividends? And that's pretty simple. Go Google it. Go to any, Google the FCF of a company. Again, cash flow from operations minus any capital expenditure the company makes. That information you can get anywhere. Trust me. Go to Yahoo Finance. Download the. They have the the income statement. Oh, sorry, the cash flow statement out there. It's pretty straightforward. Look at what their FCF or free cash flow was over the course of our last few years, and again, what their shares outstanding is. So let's say a company has $100 of shares outstanding. They pay annually. Let's say $2. That means they're paying $200 in dividends to their shareholders. If they're making $500 in cash flow, free cash flow, you're fine because they can cover the dividends, right? Another metric to look at is maybe net income. See what net income is. Has their net income been falling? Can the net income cover the dividends? Not so important, to be honest, because net income is a function of a lot of accounting stuff. I'm a CPA, but I don't necessarily enjoy accounting. But you can manage the books in a certain way that your net income can be higher, and you're still on the right side of the law. I'm not saying the companies do it, but it can be done. So that's another indicator. Look at net income, what their net income has been and what their dividends are. If the dividends start to go ahead of net income, that's a red flag. But if the dividends stay well below the free cash flow, which is again cash flow from operations minus the capital expenditure, that's your FCF. I think then you're covered. So that's basically what it was on dividends. I honestly, to me, this is something I care deeply about. I want to keep doing a good job at in my day job. I actually worked 12 hours today. It was a bit of a crazy day, but you know what? This is what I'm passionate about. I do want to see I do want to see $1 million portfolio one day. I don't think anybody in my family has gotten there, and it'll be a great achievement to get there. And I think these dividends will probably help me get there sooner, because I'm going to reinvest this back into the market, and I also feel happy that somebody else is doing the work for me, as I'm doing the work for somebody else, who's reaping the benefits of holding my company stock. So you know what? It's a give and take world. I do want to put myself in a position where I am destined, to amassing wealth at the end of the day. Will I get there? I do not know. I do not know. I'm very, I've had I feel like every time I set a goal, there are many obstacles that I face, but I do want to I do want to see this through. I'm very, very passionate about it. But anyways, guys, I wanted to put this up here. I am going to be, putting an update to my stock portfolio, hopefully tomorrow. And hopefully tomorrow is a good day. It was a good day today, relatively speaking, but my portfolio got hammered over the last few days. I think I'd mentioned I have $240,000, and if I looked at the weekly returns, it was minus 17,000. So it was crazy. So I'm going to be providing that update, possibly bringing to you, some of the news I actually got hold of a couple of articles from the .com bubble era, and they were fascinating. I will be discussing those next as well. This is amazingly fascinating stuff. I really think, I really think that anybody can be wealthy. You just have to be patient. You have to save. You have to live frugally, and you have to invest back into the market. That's the only way I know. You know what? If you invested in crypto and you got rich, great, man. Like, God was smiling on you. Good for you. Maybe you did something, good in your life, and karma kind of helped you out here. I haven't gotten to that place, so I'll slowly and steadily build this. But the most important thing is stick to a path, save, and and invest and enjoy as well. Again, whatever I said today is what I have learned. I'm not a financial advisor. I do not know how markets work. I only know, I think, maybe a bare minimum, and I'm putting that to use and documenting what I'm learning from here. So do not use this as a financial advice. I've mentioned that in the beginning of my video again. But hopefully, I'll see you again soon with some kind of semblance of good performance in my actual portfolio, and maybe get you some financial tidbit information here and there. Thanks for watching. Stay connected. I really think that like minds can accomplish great things, and I want to be connected to people who want to attain wealth in the long run. Anyways, guys, thanks so much. I will be connecting with you soon. Take care. Bye bye.